the dollar is going to crash, the world's going to be over, the financial market's going to crash like any day. And it's this doomer narrative that really came from the gold space. The only way to sell gold is to tell you that everything's going to fall apart and there's this doomsday scenario where you need gold. But Bitcoin is technology. Bitcoin is about hope. And so what I was talking about is, yes, the dollar is crashing. It's a process. It's not an event.
He emphasizes that newcomers often enter Bitcoin for one reason: NGU, number go up. They're drawn by price appreciation, but over time, many stay for the deeper reason: freedom. His philosophy is simple: give someone a little exposure, let them see Bitcoin work, and curiosity will take over. Moss notes tension between early cypherpunks and the new corporate wave. Some OGs fear that Wall Street entrants don't share Bitcoin's values. They're here for profit, not principles. Yet Moss sees this as an opportunity. People may start for profit, but over time, they can adopt Bitcoin's core ethos of decentralization and sovereignty.
Let me just say, I'm not as OG as some people. I started buying Bitcoin in 2015. It was about $300 at the time. When I learned about it and really learned how it was a tool for freedom and really a tool how we could win. As a freedom maximalist, I'm all in. I got to go tell everybody about it. I've never shut up since. When you talk about the new class coming in, a lot of the OG class is like, oh, they don't have the Bitcoin values. They're not the cypherpunks. They're not here for the right reasons. They're here for NGU, number go up. What I've often said is that you come for the NGU, but you stay for the freedom. And so I believe the best way to orange pill somebody is to let them use a little bit of Bitcoin. And once their interest is there, they'll start learning more about it. And so, yes, they're coming for the NGU. These are corporate types. These are Wall Street types. They're here because they think it's the best chance to make money, and it is. I'm very hopeful that they'll stay for the cypherpunk values of what Bitcoin stands for. One of the things that everybody seems to be afraid of is that this corporatization of Bitcoin, the financialization of Bitcoin creates that centralization. And so, of course, Bitcoin, its main attribute is it's decentralized. And so it was really a bottom-up movement of individuals that started buying it. And now as corporations are coming, Michael Saylor, MicroStrategy now holds over 550,000 Bitcoin, over 2% of the entire supply. And a lot of people are like, that's centralization. Now he's going to manipulate the price, or he's going to control the network, or all these things. And there's a big misunderstanding. First thing I would say is 80% of gold is centralized with central banks. 90% of equities are centralized between like Vanguard, State Street, and BlackRock. We're talking 80, 90%. 2%? Like, come on, right? We're a long way. But more importantly, owning more of the Bitcoin supply doesn't give you control of the network, because to the question you've asked, we have the miners and then we have the nodes. So the nodes run the database, right? That's the code. And the databases, the nodes have to achieve consensus. The miners are the ones processing transactions. So the question that you asked, is there some centralization of the miners that's going under? So these Bitcoin miners, the public ones, are getting very big, and they control a lot of the hash power, the power of the network. But it's all over the world. And what happens is Bitcoin is built off of economic game theory. So we're all in it for economic interest to make money. And so what happens is, if some of these public Bitcoin miners, for example, Mara tried this, they tried to censor blocks. They said they were going to only mine OFAC compliant blocks. So these are blocks that the government deemed are not blacklisted, they're not under sanctions, things like that. They quickly gave that up because they found if they're censoring blocks, they can't be as financially competitive as other ones that are open. And so certainly people will try. I think it's sort of like human nature to try to control things. Ultimately, I think it fails because of the open source nature and because of the incentives that are built in. I believe that the future is so abundant. We are about to see the greatest era of prosperity in front of us, but there's a lot of doomers, and they're going to warn you about the market crash coming and the end of the dollar, like it's some imminent event. Like any day now, the dollar is going to crash, the world's going to be over, the financial market's going to crash like any day. And it's this doomer narrative that really came from the gold space. The only way to sell gold is to tell you that everything's going to fall apart and there's this doomsday scenario where you need gold. But Bitcoin is technology. Bitcoin is about hope. And so what I was talking about is, yes, the dollar is crashing. It's a process. It's not an event. It's not like in 12 months or 24 months it's going to happen. It's happening. The dollar continues to lose purchasing power. And in that video specifically, I was talking about how the US government actually wants the dollar to continue to devalue. They want it to get weaker. And when you look at the dollar strength as measured as the Dixie, measured to other currencies, we can see that we're pretty high historically. The dollar is very strong compared to historical median right now. And so we want to bring that down to a more historical level, which might be a 15 to 20% devaluation from here. And so when that devalues, then the converse of that is asset prices go up. Now, not all asset prices go up at the same rate. Bitcoin is the most sensitive to that global liquidity. So as the dollar goes down and the global liquidity goes up, then Bitcoin will go up at a faster rate.
Moss is bullish on AI-Bitcoin synergy, envisioning autonomous AI agents transacting directly in BTC, managing assets, and enhancing network efficiency. He sees this as a small but high-potential slice of his portfolio, part of the broader innovation curve that will make Bitcoin indispensable in future commerce.
At Bitcoin Mina, we were both there. I gave the closing keynote, and I projected where it'd be 2030, 2040, 2050. So you can go watch that whole video for the full math. But basically, if we look at, as the world continues to increase the money supply, that money goes somewhere. We don't want money, we want the goods and services that buys us. So as they increase the money, the basket of goods, it appreciates. So right now, we look at store of value assets, and they're about a quadrillion, $1,000 trillion. So that's gold, art, real estate, equities, bonds, cash, etc. If we continue on the path of increasing the money supply that we've been on at about 10% a year, so we go, okay, so the money supply expands by about 10% a year. That basket expands about 10% a year, but not each asset goes up at the same rate. So Bitcoin is the most sensitive to global liquidity. It's going up at about 8.9 times sensitivity compared to gold's about 1.4% times, something like that. I project that Bitcoin will continue to go up faster than fine art or collectibles or gold or real estate. And so that basket by 2030 should be about 1.3 quadrillion. By 2040 should be about 3.5 quadrillion. So the question then becomes, like a venture capital perspective, if that's the total addressable market, what percentage could Bitcoin capture of that market? So if Bitcoin can get 1.25% of that basket, 1%, by 2030, that would put it on par with gold at about $21 trillion, or it'd be $1 million per Bitcoin. By 2040, which is about 15 years from now, if Bitcoin could get 8% of that basket, it would put it on pace to be about $14 million per Bitcoin. Now, is 8% realistic, or does that seem too big? Well, if we look at it from that lens, we know that Uber and Airbnb both captured 10% of their market in less than 10 years. So we're talking about Bitcoin getting only 8% in decades. And so to me, it seems sort of bearish, sort of conservative, but those would be some projections that I'm looking at. I do think that Bitcoin eventually becomes the unit of account that we start to price things in. I'm predicting that happens somewhere around 2050. Maybe a little bit past, so about 25 years from now. Already a lot of Bitcoiners that we know already price things in sats already. I was talking, maybe a little spoiler alert, but I was talking with Marty Bent earlier, and he's working on a product that everything that you look at on the website instantly converts dollars into sats. You can start to be seeing it that way. But I think that we'll eventually price everything in sats, and I think that's about 25 years, but no reason to price that in gold. The business side is where we make the money. That's where we create the wealth. And then I buy real estate for tax efficiency. So I buy real estate so I don't have to pay tax on the money that I make. And then the after-tax dollars, which are more money, then those goes into some of these Bitcoin tech plays. So on that side, it's specifically Bitcoin, pretty much all Bitcoin. And then I have a fund, so the Bitcoin Opportunity Fund. So we're investing into businesses that are building on and around the Bitcoin ecosystem. So the majority of that in Bitcoin, some of that in the fund where we're investing into these businesses that are building on and around Bitcoin. And then a smaller piece that's in some of the more speculative plays, so a lot of these Bitcoin treasury plays. So we're getting into all of those, both in the fund and personally, I'm investing into these companies as well. There's some convergence of AI and Bitcoin coming together where AI agents are working with Bitcoin directly. So I'm investing into some of that as well. And those are small percentages of my portfolio, but the majority of that would just be Bitcoin.
For Mark Moss, Bitcoin isn't just a number on a chart, it's a movement. It's a decentralized safeguard against financial overreach, a high-octane store of value, and a bridge to the most prosperous future humanity has seen. His message is clear. Institutions will come, dollar value will shift, and markets will evolve. But Bitcoin's open-source, incentive-driven nature makes it resistant to capture. If you found this breakdown insightful, hit like, subscribe, and share.